Hello everyone, this is module 9 of Comparative Financial Systems. In this module, we are covering international financial systems and our focus will be on international flow of funds. In this lecture, we will cover balance of payments and their components. Let's look at the agendas of this module first. First of all, we will cover balance of payments and their components. Secondly, we will cover factors affecting international trade flows. Let's start with balance of payments. Balance of payments is a summary of transactions between domestic and foreign residents over a specified period of time. For example, summary of all transactions between Bangladesh and Indian residents over a specified period of time is the balance of payments between Bangladesh and India. Now let's look at the components of the balance of payments. There are two components: current account, which basically summarize the flow of funds due to purchase of goods and services or the provision of income on financial assets. For example, when we purchase computers from China, that's a purchase of goods and services from China, and that will be part of current account between Bangladesh and China. Then the second component of balance of payment is capital account, which usually results from the sale of assets between one specified country and all other countries over a specified period of time. Now let's look at more detail on current account. First of all, current account includes payments for merchandise and services. Payment for merchandise and services includes the export and imports of tangible products that are transported between countries. It also includes tourism and other services. The second component of current account is factor income payments. It represents income received by investors on foreign investment in financial assets. For example, if a Bangladeshi investor invests in Indian capital market and receive interest or dividend payments, that will be part of factor income payments. And the final component of current account is transfer payments. It represents aid, grants, gift from one country to another country. We often say that Bangladesh receive aid and grants from foreign countries. We often provide gifts to foreign countries as well. So all sort of aid, grants, and gifts between countries are part of transfer payments. Now, there is a term called balance of trade. It is simply the difference between all exports and imports between two countries. This balance of trade is also part of current account, and it's a part of payment for merchandise and services. Now let's look at capital and financial accounts. It includes direct foreign investment. So investment in fixed assets in foreign countries is part of direct foreign investment. For example, when a Chinese manufacturers invest in Bangladesh, it will be part of direct foreign investment. Then there is portfolio investment. It is the investment in long-term financial assets by investors such as stocks and bonds. And these transactions are between countries that do not affect the transfer of control. For example, if an Indian investor invests in the Square Pharma stock, which is a Bangladeshi company, that will be part of portfolio investment. But if the Indian investor purchases all the shares of Square Pharma, that will not be part of portfolio investment, because when an Indian investor purchase all the shares of Square Pharma, that will affect the transfer of control. That means the ownership will be transferred from Bangladeshi owners to the Indian owners. In that case, it will not be a portfolio investment. Rather, it will be part of direct foreign investment. And the final component of capital and financial account is other capital investment. It simply involves investment in short-term financial assets between countries. For example, money market securities are part of short-term financial assets. If investors invest in foreign money market securities, it will be part of other capital investment. That's all about this lecture. In our next lecture, we'll cover factors affecting international trade flows.